Rajit Mehta, MD and CEO, now joins us. So your bottom line is still under pressure. When can we see a turnaround happening over there?
First of all, it's been a great quarter for us. Our revenues have grown by 39% quarter on quarter compared to same period last year. Our EBITDA in HYFY23 compared to same period last year has gone up by 3.3x. All our underlying business verticals under Antara Senior Care are doing quite well. If you look at Dehradun, 94% of our inventory has been sold. In Noida, 92% of our inventory has been sold. In fact, we have maintained a very healthy, nearly 10 sales a month kind of trajectory in the last 12 months. And the collection also, are quite healthy. Construction is on time. On the care home side, which is part of Antara Assisted Care Services, our occupancy has gone up by 106% compared to same period last year. Contribution margins are consistently improving in all the verticals of care at home, medical equipment, and in care home. We also launched a very interesting, first of its kind memory care offering in Gurgaon. This is a very thoughtfully rated, facility for people with neurocognitive disorders. Launched on September 10th, already has 3 patients, there. So it's been a great quarter, and work has now commenced on the new projects for Gurgaon and for Bangalore. We're looking at, potential partnerships to be able to grow on that side as well. So it's been an interesting quarter for us. And therefore, we are finding our earnings, stabilizing and our EBITDA consistently going up.
Sure, but talk to us about your growth plans as well, because you talked to us about how the improvement has really shaped up. But going forward, what's the growth plan and how will you fund that?
So we have a very strong balance sheet, as you can see. We have about 300 crores, in our treasury. This is after the capital reduction, money has been paid out. And we also have about 150 crores of monetizable assets. So a very strong balance sheet to be able to fund our growth. So at this point of time, we are not looking at any fundraise. Next year, we'll see, depending on our growth plans, what we need. So that's on the question on the funding side that you asked. Yeah, the growth, as I said, the strong balance sheet, they will be funded through internal accruals. Now, as we look at expansion in the future, I've always said in my last few interactions that we are planning to set up 8 to 10 communities of senior living, across various parts of India, North, West, and South cluster. On the care home side, our intention is to create about 2,000 beds in the next, 5 years. We already are the largest provider of assisted living or care homes in NCR with 150 plus beds. And to have a very healthy, medical, Medcare equipment business as well. So those are our plans, and they'll all be funded, from our balance sheet currently. But as we expand, if we need to raise funds, we will then look at the opportunity to do so sometime next year.
When we look at the reserves, it's at 805 crore by September 2022. What are the plans for that?
Plan is to invest let's say about 300 to 400 crores in the growth of both residences for seniors in care home, care at home, and medical equipment. So at this point of time, that's the plan. We are examining a few more potential opportunities, but too early for me to talk about.
Looking at further opportunities for growth, you're likely to use that reserve as for expansion of your real estate business as well. But what about deleveraging? Do you have any plans to reduce your debt as well?
Currently, both Max India and Antara are all debt free. We had a debt on our books, last year that has been paid off. We have a very small debt in one of our SPVs, which is doing the Noida project, but that will be paid, through the approvals in that project. The collections in Noida are quite healthy. In fact, they're about 10 to 12 crores a month consistently. So at this point of time, I'm glad to report that Max India and Antara are all debt free.
Thank you so much, sir, for taking out time for us. Always good to get perspective. On that note,